Good morning, everybody. TFIF. Thank fiddle, it's Friday. Not a long week, slowly passing under the bridge. Hope you're doing well. Good morning, Kay.
Good morning, Ryan. Good morning, everybody. Well, thank God it's the last day of the month, the last day before some holidays. Oh man.
Yeah,
I can't wait.
I've got one half a foot out the door already. That's the thing when it's the last day before you're going to have a break. You know, you got one eye on the exit. I'm mostly packed. I've got to play my first game of car boot Tetris, trying to get all the crap in the car, which is always a fun game to play. Yeah, so you're off on your jollies as well, just to let everyone know.
Yeah.
Both myself and Kay will be off next week. You should be joined by the effervescent Steve Stelius and some special guests, Gregor and the like, next week. I'm potentially off the second week as well. My kids have got a scout camp that for some reason months ago I volunteered to help out on, but I'm not sure the exact dates or days I'll be asked to do there, so I could be off the whole next week. Kay, you're back potentially Tuesday week, aren't you?
Yeah, I'll be back. Well, it depends on the traffic and the Eurotunnel traffic jams and stuff. I'll be likely back on the Monday sometime over the day, but then starting the flow show again on my side from the Tuesday the 9th for sure.
Tuesday 9th. Yeah, so just so you guys and girls know about that. Right, let's get into today's business. Starting with yesterday, the bid and Z call, the phone call that a lot of people are looking at to see if there's going to be anything of note from that. Nothing really of note. The general gist is Biden wants to keep cooperation and communications open. Z, if you believe the state media, told him that that's fine, but don't even think about playing ball games on our front lawn or we'll pop your football. Obviously a direct reference to getting involved in Pelosi's potential trip to Taiwan. So a little bit strong rhetoric, if you like, from the Chinese side more so than the US side. But apart from that, no real comments from there. Overnight, well, just before I do that, you know, if you guys and girls want to take advantage of joining us on the Forex Analytics platform, you know, there's the page you can see on the screen there. Please do take advantage of an exclusive 20% discount that I offer via Forex Flow on that subscription. That's for the lifetime of your subscription. As long as you subscribe, you'll get that discount there. So if you want to get yourself set over the summer and come and join the community, please feel free to do so. So back to looking at some of the data. Japan, a bit of data out overnight. Tokyo CPI in the picture, up year on year in both measurements, the core and the headline number. So, you know, that's pretty much followed the national numbers we've been seeing in higher CPI. It continues to grind higher. And the question for the market and the Bank of Japan is how high is that going to grind to and how long is that inflation going to stay entrenched? It is moving much slower than we're seeing around the rest of the globe. But doesn't mean it's not going to stop grinding higher. And there will be a point where inflation, like it has in the US, like it has in the Eurozone, gets to levels that becomes uncomfortable for the Bank of Japan, irrespective of the main drivers behind it. And even if the Bank of Japan still stick to their guns, that's not going to stop the market from trying to push their buttons again like we've seen previously. But some of the other numbers there, retail sales as well, not too bad. Down on last month on the year-on-year numbers, but still in the positive there. Unemployment rate standing still as well. Industrial production, those numbers looking, you know, fairly decent as well. Bit of a miss, you know, some of the numbers if you take it down from last month on the 1 month ahead stuff. But overall, the main number was up 8.9%, a big beat versus the 3.7 expected, and minus 7.5 seen last month. So overall, you know, positive data from Japan. I'm not going to say that some of that is the sole reason behind the drop we've seen today in dollar yen. You know, better data, better for the currency, because that hasn't really been the case in size. It may just be a very small part of the equation there. But we also got a headline out from the Japanese government saying they tapped its 257 billion yen budget reserve to try and help cope with inflationary pressures. Kay, I saw this headline. I haven't really looked into it. You think that's anything of note for the yen now?
Well, they did say that they would be compiling budgets to help companies with the inflation and with some high energy price costs. So I reckon that's them starting it. It might have been in the mix with the move that we saw overnight. But we knew it was there. We just didn't know when they would start to tap into it. It's a pretty fair amount to start with. But then again, Japan is a big country, right?
Yeah, exactly. Just some of the other data. Australia PPI on the quarter, you know, coming in still up, but a little bit down on last month. Sorry, let me just shut my squawk up. There we go. Quarterly on the year, up again. So, you know, PPI is another inflationary measure that we look at that feeds into CPI. Can be a bit more volatile than CPI numbers. Then we've got a bit of confidence data out of Japan as well. Bit softer there on those numbers. Construction orders up, still positive number, but down on last month, year on year. And then we get into the Eurozone stuff where we had all the flash GDP and CPI numbers, and largely looking pretty okay. Obviously, the big shock has been US GDP, which we'll talk about shortly. But, you know, the numbers coming out from the Eurozone, you know, pretty all right considering everything that's going on there. Whether this is just a last hurrah before we start to see things really turning south, we don't know. The revisions could be important for that. But as you can see there, France GDP up there, didn't quite beat last month or last quarter on the year-on-year numbers, but still beat expectations. German import prices there, again, sort of, you know, a PPI inflationary number there, still looking fairly hot. France, you know, we get into France, GDP, CPI, all moving higher. Spain as well, you know, another uplift in CPI, nearly 11% there at the moment. But GDP, you know, looking okay, and in the Eurozone measure of inflation looking good. And then we get to Germany. So the unemployment change there, as you can see, unemployment rate up a bit, you know, unemployment rising just a touch there. I wouldn't say it's horrific numbers there, but again, a feature that we're going to need to watch over the months ahead if Germany is going to start stuttering. And if you compare their GDP as well, you know, GDP was flat on the quarter, missed expectations year on year. Compare that to the others and look at the country above, Italy, posting again fairly decent numbers. And one of our guys in our chat room, Five Magics, he mentioned that it might actually be Germany that taps the TPI or causes the ECP to use their TPI when everyone has been thinking it was going to be Italy. So for a change, it looks like the southern states are propping up Germany, which doesn't happen a lot. Usually it's the other way around. We also got a bit of UK consumer credit and mortgage data coming out. Slightly lower in mortgage approvals, mortgage lending, still fairly robust, even though it was lower and missed expectations, still fairly robust. The key component here that I'm looking at is the Bank of England consumer credit number. This accounts for loans outside of mortgages that people may take or debt. Now, the interesting part of this is that out of the, let's call it 1.8 billion in consumer credit, 1 billion of that went on credit cards, and they give us this split number. That's up from 400 million last month. Now, with the ongoing cost of crisis stuff going on in the UK and the inflation pressures, squeeze being put on households, watching something like how much credit gets slammed on the credit card is going to be a big feature to look for, because it will show signs of pressure being put on debt for the UK consumer, and that's going to be something the Bank of England's going to be looking at as well. Borrowing is fine, getting a loan for a car, house building, that sort of thing is fine, but a big jump in credit card debt tends to suggest that there's problems brewing because people don't have the disposable income, so they're sticking it on the plastic. Now, this credit card thing can rise and fall naturally. If you're seeing credit card debt increasing, but it's coming alongside strong employment, big wage rises, it doesn't necessarily mean that there's problems. It just means that people have got more money, they put more on the credit card, but they can also pay it off. But when we get times of stress and we see credit card use picking up, that can indicate something's not quite right and something more negative in the economy. So this will be something that I used to keep an eye on quite significantly, depending on the type of situation in the UK. It's something I'm going to be focusing on a bit more, these numbers as they come out, because, as I say, it could potentially show signs of stress for the UK household, and that it will become a big feature for the Bank of England, because more people getting into debt, the higher they hike rates, the higher the costs are for repaying that debt. It becomes a bit of a spiral. So something to look at there. Apart from that, the rest of today we'll look at quickly what's coming out. We've got the Eurozone numbers as well as Italy. We'll concentrate on the Eurozone. CPI, another 3-point jump, 8.9%. GDP overall looking fairly decent, as I said. The core number in the Eurozone came in, and it doesn't show it on. It doesn't show it on this one. The actual core number was 4% versus 3.7% prior, which is a fairly significant jump for the core. It tends to move a bit slower in the Eurozone. So now we're 2 whole big points above the ECB's rough target, close to but below 2%. So money markets at the beginning of the morning priced down a 50 pip hike for September to something like 44% from 50%. I haven't seen the latest, but I suspect that's going to start going the other way again, based on all the numbers that we've seen this morning, and particularly the inflation numbers. For the rest of the data today, we've got the PCE data coming out. So another look at inflation in the US. Given everything that's gone on in the CPI numbers and in the GDP yesterday, this could once again cause a bit of waves in markets, because we have seen some big moves, obviously, which we'll talk about. But another thing to look out for is these employment cost index and wage numbers, because Powell flagged these up on Wednesday as something that's important that they're going to be watching. So keep an eye on this. Their Q2 numbers, if they're strong, that's going to keep their hike bias on the hawkish side. That might counter what we see in the PCE numbers. But I'm a little bit uncertain what the market may read into this or how it may react to this. This isn't usually an item of data that people pay a huge amount of attention to, but just like when Powell primed the Michigan and inflation expectation data, he's flagged this one up now as well, so it's going to get additional attention today. Apart from that, I think that's it. We got monthly GDP from Canada, Chicago PMI, and the final, is it the final or is it the preliminary Michigan later? Let me just check that 1 second. Yeah, it's the final number from the Michigan. Again, keep an eye on those inflation expectation numbers to see if there's any changes there. They did dip a bit over last month in the flash number, so just keep an eye on those. And so a quick look to yesterday and the US GDP, which obviously put the cat firmly amongst the pigeons. Where are we going? Why does it not click? There we go. So it was the will it, won't it drop into recession, and it certainly did with a bit of a bang. 0.5 expected, it came in at minus 0.9%. We've already had the administration in the US coming out and trying to brush it under the carpet, saying it's not a real recession. Obviously, as I mentioned, the press don't care. The US is in recession, irrespective of what the details are underneath. I actually agree with them to a certain point. The US, Biden and Yellen and such. There is a thing about recessions that gets all the headlines, but you have to look at the whole picture. Is the US entirely or wholesale going off the cliff? And the answer to that is no, they're not right now. Yes, there are some softness there. We've seen it in the PMI data. We've seen it in the housing data. It's building up most definitely. But does it mean that the US is going to crater right now, or is in a crater right now? And I don't think it does. And that's been acknowledged by Powell. They've still got a strong jobs market. This consumer is still spending. Okay, real retail sales may be lower when they're adjusted inflation, but people are still spending. Nothing is really going backwards as of yet. The only real negative contraction we've seen is from the services PMI, and that still needs to be confirmed from some of the other numbers like the ISMs, which I think are coming next week. So for me, yes, the US is in recession, but it isn't. The whole economy isn't going backwards, and that's the important factor now. It doesn't mean it may not, and we could well be heading that way, but it's not happening yet. And I think maybe the market has again overreacted to that somewhat, as it tends to do, goes the other way. As far as the Fed is concerned, we've heard that Wednesday, they expect some pain and they expect to hike through the pain. But whether this sort of number potentially gets them to be a bit more cautious, we won't find out, at least until Jackson Hole in August, and maybe not until September, if we don't get any Fed heads in the meanwhile. Kay, what did you make of the US data yesterday?
Yeah, exactly. And there was this interesting point that the inventories, that we have been flagging in the month of May, had a pretty big impact on those GDP numbers, pulling it down quite a lot. So I still want to see, and as we know, we had a decent revisions of late on all those GDP numbers. So I still want to see how all those things are getting confirmed. We're still struggling with the supply versus demand and all kind of things. Okay, it is a fact. The number is there. So and that also dragged the dollar yen down. That's another part of the dollar yen story. Although now, if we look at the dollar yen versus yields, it was a bit out of sync, as I said a couple of times, when it was high compared to the yields coming off. But now, with the 10s are back above 270, it might be a little out of sync here on those lows at 132.5 as well. There's a bit of a retracement level there. People are talking about, okay, we're going back to 130. I want to see what happens while we are off next week. Is it really going to create a down to 130? I'm not 100% sure because of those yields. As a matter of fact, the yields. The curve has steepened somewhat after the past 2 days, which is normally not a negative factor for dollar yen. So, on the GDP, I'm going to reserve my final verdict. We have seen the move, but will it continue is a big question mark to me.
Yeah. And as everyone's seen, no doubt, we have had a big move in dollar yen, quite significant. It's been busting through the tech levels. I've been keeping an eye. I mentioned this 134.40 area. I've been burnt trying to catch a knife twice now. I tried it yesterday afternoon into this 134.40 area. got knocked out on the stop there. I tried it again this morning down at this 50 fib 132.87, which was also the top of the daily cloud, which is a big technical indicator, especially in Japan. That got carved through, got stopped out on that one as well. I did keep the positions small and fairly tight, giving respect to the moves we've been seeing. But that's two knives I've tried to catch and two have failed. So I'm sitting on my hands right now. The only area I'm potentially looking at next, if we go down there, as Kay mentioned, is in the low 131s, which is this breakout area here, which caused this next leg higher. So to me, that's the next big significant point. We had plenty of times banging our head up there. I think, if I take it back a bit, we had several attempts up there before the breakout. Oh, where am I going? I'm trying to look back to the area back here. Okay, can't really see it clearly, so let's just ping it back to that. Yeah, so this was big resistance up into 131. Called it 20-30 zone on the way up. Then we had the break. Had a big move up, came down 131, 50s, near 60s, which is a pretty good confirmation of this area here. It is the 61.8 fib of this leg that we've seen. So again, on the technical front, it is a big level, and being that breakout point, it will be very well eyed on the test down. But as I mentioned, it hasn't held the prior breakout here that we had, 134s. Couldn't hold that really well. And we couldn't hold the fibs and other levels on the way down. So technically, it's one of those moments where you come in, you see the tech levels getting smashed, maybe you have a couple of goes, you get burnt and you think, right, I'm going to sit on my hands now because the techs aren't working. The market needs to do its thing, whatever it wants to do, let the dust settle a bit. I know Kay grabbed a little scalp long near the lows, and you got out of those just before 133 because it just wasn't looking all that, was it?
Yeah, I mean, we tried a couple of times. I bought it actually very well, but then 30 points later, I was already out because it wasn't looking promising. 133 and the top of the cloud at 132.90 was already struggling, but. It's one of those where I might have taken the first 30 pips and then while going, because I'm going on holiday, just kill it and move on. And there's 3 big figures to come. What I was going to mention, and you were right to mention that it's important for the Japanese. They are watching this like really, really with the Hawkeyes. Is this cloud? And I'll share my screen a bit later on when I run through my stuff, but. It's very important, this cloud, because the whole move down from the lows, actually the 102s, we have only touched and broken through the cloud on a very limited number of occasions. But the whole move higher, every time we went into the cloud, it's been rejected, and we went straight back up. I mean, and the cloud is now here, and this is important. As long as we are not going to close inside or through the cloud, the Japanese long-termers are not going to let go, in my opinion. So we have to pay very close attention to the cloud now, because it's there.
Yeah, and it's not. I've just popped that on the screen so folks can see, because I haven't got that on my trading view stuff. But I'm sure Kay will have it up there, I assume.
Yeah. It's
yeah,
and it's important. It's really important that we keep a very close eye on the cloud. And if you look at the width of the cloud, it's well, yours is slightly different than mine as usual, but
yeah,
it's going to it's going to be important. Yeah, in the upcoming sessions, call it next week. If this cloud holds again, the longer term move is going to be intact for the Japanese at least, and we can be looking at our fibs as much as we like, but they are going to look at this one. And yeah, no, I did not have my heads up from the traders that it was going to go down. The thing though is that which is a small victory because I've been long dollar yen for a good while in this whole move up. The good thing that I spotted towards the highs that 139.40, and since then I've only been very sporadically long dollar yen, but the big drop I very luckily haven't taken it as I say up my lederhosen.
Yeah, it certainly confirmed the rally sell sentiment that I've been feeling for the last couple of weeks or so. But yeah, I wasn't on it, so that makes it a bit redundant. But yeah, this the cloud is an important feature for Japanese traders. Now I know there's many who use the cloud on other pairs and assets, but it really is one that's really used on yen pairs mainly, isn't it, Kay?
It is. So they mainly use it for the dollar yen. The next main investment currency, not talking about other assets or vehicles, but there are other mains. Investment currencies are the Aussie. They are doing some sterling as well, euro obviously, but the dollar is always going to be their main point of interest and what they are monitoring the most. And the cloud, and also people are trying to put clouds on every time frame. Just to let you know that I already take some liberties of putting it on a 4-hour time frame, but the real Japanese senseis, they are not going down below the daily. And they don't look at clouds on the hourlies or minutes or charts. That's for them. It's irrelevant. They mainly go down to the daily, and some of the traders down to the 4 hours, but nothing below.
Yeah. So if you are going to start looking at cloud formations, it may not be wise to start using it for everything. Just keep it dollar yen on your daily, maybe a couple of the other yen pairs, but just use it as something else in your tech arsenal to keep an eye on, because there is a big influence from Japan traders on this one. Right. So what are your thoughts from here, mate? Do we go lower, or is every chance that we can bounce back up, and where can we get to on a bounce?
I think to me personally, I think it's enough. But next week is going to be determining, right? Because we are past end of month, we are past all the data that Powell said that we should watch. That's going to be determining. We could have some more end of month shenanigans later on today into the 4 p.m. London. But then, sorry, this cloud is going to be very important. If it holds, I think we can go back. We can go back to 135s pretty easily, in my opinion. But then to go through 136 is going to be I think a bit difficult right here and now, since seeing the US data. But I can see this starting to install inside a range. I will show my cloud. Do you want me to take the screen, by the way? Or?
Yeah, go ahead, mate. Next week is another big data week. As I said, I think we have the ISMs, but we've also got NFP coming out, which if there's anything negative from that, that's really going to cause some waves, I think, because the market is looking for, very bearish on the US economy, despite what Powell's saying, and this battle between Powell still being hawkish and the market seeing the data crumble and soft landings, crash landings, that's really going to be bringing us the volatility on these data numbers.
Yeah, exactly. I mean, it's going to be an important week next week. So for those reasons as well, and then we're starting a new month. The investors will have crunched all the numbers and form their opinions, and that's going to be quite an important week. So here we are. This is a closer look at this cloud. So the base is where Ryan has his base. For some reason, we have sometimes slightly different clouds. So, but I'll keep it to mind today. So the bottom of the cloud today is at 113.90. If we would drop below the cloud, just know that the Japanese might get a little bit nervous about everything that's going on. Let me just kill my squawk here. So that's going to be important. Close above and open the next week back above and hold. It's going to, in my opinion, be quite important and significant, which then can lead us back to a bit more range trading. Let me just, because it gets a little messy when the clouds are on there as well. So here, this is what I was showing the other days. So we had the first break here, then a successive break there, and then we had like a massive acceleration. I do have a I do also have a retracement here at 132.87.5, which is exactly where the cloud lies. So that, in my opinion, is not to be discounted either. And then on the, a little bit more longer term, from where we really started to bounce back in September, we had this whole period of like, we are coming from lower, but we had this whole period of like trading wishy-washy around 110, and then from there we took off. And there is this first fib as well, just in the 132s, and that may have its importance as well. That makes me think that it's possible to start range trading if ever we, and you highlighted this level as well, call it 131, 20, 30, something like that is going to be important, because it's the prior highs, it's the deep low around here. So that is going to be the next important level. And then we are looking at the bottom of the cloud, which I showed you on the other on the other screen. So it's really, and then I'm going to compare this with the battle for parity in the euro. It's really going to be about this, the cloud, and then of course the battle for 130 really in the dollar yen. I think, and my original thought was that there's going to be a big amount being bought again once we're getting closer to 130, but we really have to look at the US situation right here and now, because that's going to be determining if the US 10s can't keep the 270s and we're going back down, there is a risk that we're going lower. Now, the last thing I was thinking about, well, when I woke up this morning, when I saw the moves, I thought like, well, are they intervening or something? Is there a stealth intervention going on? They won't let us know, but everything is possible in this game, because most of those big moves have happened in the Asian time zone. Okay, we had moves lower in Europe as well on the GDP and everything, but every time Asia opened this week, they sold it off. So is it end of month? Is it stealth interventions? Everything is possible, but therefore now we are going to look back at the data. The next week data are going to be important, and keep that cloud in mind. As long as we are above, Japan won't give up. Yeah, tell me. Yeah.
Just a quick one, mate. I'm not sure if it's bonkers or not, but I did hear someone talking about some of this move was Gotobi, which wouldn't be right because it's the 29th. Would it be?
I mean, they can do on the last month, but Gotobi is not. Gotobi is used for. The term means the go is 5, to b is like to is and b means like the repeat. So every 5.
Every 5 days, yeah.
Most important days are the 5th, the 15th, and then the last day if it's coming on the 30th. But now we are like on the 29th. It could have been, but normally the English version of it is got to buy. It reads like got to buy, and it mostly means that on Gotobi days, it's when the Japanese importers, the energy corporates, they actually need to buy dollar yen. So it doesn't come together with the Gotobi pattern unless they overhedged. But that is something that I will leave in.
That's why I found it a bit of a strange comment from someone saying that some of the move overnight was part of the Gotobi. But
now that's somebody
you never know what analysts look to look at.
No, that's somebody who misunderstands the concept of Gotobi.
Yeah. Anyway, sorry, mate. You can crack on.
Okay, so it's going to be very important this level, and then add to that the 131s and the bottom of that cloud. That's really going to be the battle for 130, in my opinion. But as long as we stay above the cloud, if you look at the overall move, nothing has really changed in the global scheme of things. We are still we have seen, okay, this is a bigger one and it goes really fast, so which makes me think it might have to do with the end of month as well, and the market getting a little spooked by the Fed leaving the door open to less or more or uncertainty, let's put it that way. And then additionally, we had this GDP number and the 10-year yields are risking to drop below the support zone. So all of that spooked the dollar yen market a bit, and people ran for the exit. There's also another one here, but I'm not going to complicate the picture. Okay, let me move on. That for the yen. Let me move on to the quick one on the euro. As you already mentioned and so rightly pointed out, today we are seeing everything is about end of month and those data. So we see the euro crosses move higher, but then the euro dollar is completely failing to break even above 102.70-80, let alone going up to the 103.5. I think that might be music again for next week. This kind of tests if the end of month is really doing what it does right now and keeping it in ranges. But beware if, despite all those data, we are going to go back below the 101 next week, because then that may mean that this whole corrective pattern is over. People think that the dollar is dying now. I'm not yet so sure. I'm not yet sure. I really want to see those levels crack. I still think there's a lot of weight hanging around the euro's neck. So yes, these data are kind of supportive. Can't deny it, but we need to break those levels to really start to make a move. Gold and silver, they have been behaving so much better of late. So the gold, let me just do something here. This gold is as we bounced really hard, we can actually see an inverse head and shoulder pattern, if we want, broken here when we went through the 4750 zone. That needs to hold now to continue to move higher, and ideally, to me, we have to go and break 1780 to really start to ramp higher again. I have nothing in it. I'm not going to take anything in it before my holidays, but it looks a little promising now to buy the dip and for a test of this. But let's be careful. Next week things can change. I'm more constructive, to be honest, on silver for as long as we stay above 1940. People in the room know I added yesterday here that I sold some legs out of it. Again, like I did with my 1825s, I folded a small piece. Folded a small piece of this one together with a slice left over from this one into my longer term. So now I'm a little bigger in position, thanks to the jobbing that I'm doing regularly with my positions. My average is really absolutely brilliant, and I'm going to be watching this kind of zone here in the low 18s to panic or not. I may lighten up if we break back through this trend line, but I'm more constructive now on silver than I was a couple of days ago. Moving over to the rest. I don't like to have a lot of positions open when I'm not in front of my PC. So today I decided to square up my Euro Canada just for a while. Not saying it's time to buy back, but we can't deny it's going a little more sideways right here and now. There are a lot of resistances already. This is the first one that I highlighted yesterday, coming down slightly around the 130, 120, and then 130, 130, 40. But that's a bit near term. The big one is still going to be 134. If ever we start to break back down below those 129.60s, I think we are on our way to 127s, as I showed earlier. But for the time being, I prefer to err on the cautious side, especially as well. It's end of month, so not really going to be bothered to have too much risk in the books. The other one I'm planning to keep a small part of it open on the euro. No, this is the Aussie dollar. Sorry about that. Well, talking about the Aussie, we have this prior low around 69.55, then the lows of the other day around 69.80. I am in a little tiny long because the end of month flows seem to be positive for the Aussie. But I'm not going to get married with it. If it doesn't work this afternoon, I'm going to take a small few pips loss on that and happily leave it alone. The big support is only waiting lower in the 69s. It is a fact though that we're having trouble to keep the 70 level. So that's another one which is going to be important for next week, in my opinion. With more data, with the RBA coming up as well. So keep an eye on that one. And ideally, a confirmation above 70.5, then I think we are back off to the races on the Aussie dollar. But wait for the RBA and possibly the US report. This one, though, I'm planning to keep a small one open. I'm still well, I mean, my average is pretty great. I've been jobbing it around, as people in the room know. We are trying to retrace a bit now. I think the 146, 35, 40 is the first little level. If it goes through, we might see a move back up into even into the 148s. But I think in the longer term, this thing is still oriented rather to the downside than the top side. So I might keep just a small one open. As I said, my entry was around is around here at the 147.90 the other day, and been jobbing it around, buying back, selling again, buying back, selling again. So I'm going to keep maybe just a quarter position open for the road. This one, the Euromex, is also still looking very offered, but we're again like in between 60, 80, 85. Can't retake 21 for the time being, so I'm keeping a really tiny one open. It's good for the carry as well, and I'm just going to let that one run. Panic stop. Well, not really panic stop, but I think I'm going to tighten the leash now and just put a stop above 21.15 or so, in case something goes wrong. But my average is really pretty cool on that one as well. So I'm not going to be bothered with only a quarter of the position out. Ryan, back to you.
Yeah, no worries, mate. Yeah, Mike's mentioned about a big expiry today. There is a big expiry again at 102.40.50 in euro dollar, 3 billion. We run the expiries every day and over the weekend on the Forex Analytics platform. I'm happy to show it now and again on here, but obviously it is a paid service for our subscribers, so I'm not going to give that gear out for free all the time, but I don't mind looking at it now and again. There are various other places that produce these option details as well, but I can guarantee none go into as much depth as we do. So looking at euro dollar itself, and a theme I'm getting this morning, and we were talking about it in our chat room as well. We keep getting these spikes up in things like the euro, and I know some of you guys are talking about Aussie dollar as well, and the 70 level. We keep getting these moves up, but they just can't hold, and that's pretty significant. I mean, for everything that's gone on today, cables, blown up into the 122s. Euro dollar, it just can't get above this area, and this area isn't really a huge area in the grand scheme of things. If we look at a weekly chart, you can see it's a nothing level, but it's significant in the short term.
Ryan, we are not seeing your Ryan, we are not seeing your screen.
Yeah, hang on, might help, mightn't it? Right, so let's start again. So as I'm saying, the euro, for everything that's going on, we can't break into this little area here, okay, which has been the short-term highs since we had the move down, through this 103.40, which was the multi-year low. So as I say, everything that's going on, dollar yen's flapping around, cables busting into 122, really rocketing. We just can't hold these moves, and we can't make a break through this area. And if we look at it in the wider picture, it's nothing. It's nothing in this whole big move. It's a small, tiny step, and we can't make these small, tiny steps. It tells you something about the price action. And that's significant, I think, for a lot of pairs today. Aussie dollar, we keep getting a move up through 7,000, but we can't hold it, and we keep coming down. It can't sustain a move above and hold it and keep it and build on that. And I think that's significant because, if the market is going to be antsy over the US, but it can't sell off the dollar significantly and hold those sales, it tells you that, the trends are still in place. Maybe we've found a bit of a bottom. Let's go back to the euro. We have got a bit of a confirmed bottom against a huge level, that parity level. We had the fake out, we had the little break, then we held it after. So there's reasons why, sellers will find it tough into here. But you've got to ask yourself, for us to get back down there, what has to happen? And I think things have to significantly get much, much worse in the Eurozone than they already are to get us a test down here. So while we can't hold gains, and let's say the squeeze can't be sustained on shorts up into these levels, you've got to think that it's going to take something significant to get us all the way down. So range trading is what we're likely to continue seeing. We've come through an ECB, we've come through a Fed, we've come through a big US GDP numbers, we've come through big Eurozone numbers, and here we still are in a 200, 250 range. That tells you the story in itself. And it's a bit difficult, and I've seen it a bit difficult for some of the guys in our room who, long euro dollar, and they get these moves above 102 and they get these pushes up. People think, here we go, we're off to the races, and then the tire bursts and we're back down again. So I think longs are still valid. If you want to be on the long side of this one, longs are still valid, but it's a bit more dangerous being long up here as opposed to long further down. Hence why I'm not really keen to get involved myself in these sort of areas, because it's not the levels I'm looking for. If we get a move down here, judge it on its merits. Why are we back down here? If it's no real change to the fundamentals, no increase in problems with the Ukraine, no increase in problems with gas supplies, then I'm going to be looking at potential longs down here. Conversely, if we do see rising problems with all those factors, particularly going into winter with a gas situation and things are going to get tough, this is going to remain solid and we're going to be heading back down here, and then this level comes under pressure as well. But, Kay looked at it, Aussie dollar, as we said, the 70 level can't get a move above and hold. And that's been a feature of a lot of pairs. Cable, it's 120, 180 was the level. You can see it around here, into 122, bang, big blast through. Cable does what cable does best. It takes everyone to the cleaners, and then it goes and shit's on your front doorstep by going into complete reverse. So it is a bit dangerous at the moment. If you are long these pairs and you're thinking, yeah, this is the moment we get a break because US has got into recession, it's still very dangerous. You don't want to be hanging on to something. It's a time where you need to take some profit off the table, just so you bank that. So if you do get these reverses, you've got some money in the bank. One of the people in the room, viewers talking here, short 70.30 in Aussie dollar, great trade, great entry, great pick. Take some money off the table, make sure you get in it, because if we do suddenly go on the reverse, if we do suddenly break higher, it could be swift and fast. Here's another one, Euro Sterling, had the breakdown, spent plenty of time going down, quite violent moves down, and now we're back up edging into this 84-20 zone. I'm all out my longs. I had enough of it, not playing ball, and part of me is now questioning, should I have done that or held on to it? But I made a decision, and for the moment I'm happy with the decision. But can we get back into the zone and break higher and push on up, or are we going to fail here? This is the situation. I wouldn't be surprised personally if the euro continues to suffer. I don't think there's still reasons to buy it, fundamentally at least. So these moves up we see in the euro versus the dollar, or the dollar weakness elsewhere, is more the story rather than because the euro is stronger. So I don't see this as a euro strength move. I see it just more as a reflection of the volatility that we've got between the pound and the euro. Cable is always the more volatile currency, and there's no significant reason why this should carry on higher. And I would expect perhaps it to get back back towards some of the prior lows, maybe in the 82s, or at least low 83s, down to all this sort of areas around here. So that's my thought on a few of these pairs. Again, if you want to pop something into the chat, let us know what you want to look at. Please put it in there, but give us a bit of information. What are you doing in some of these trades? Where are your positioning? How do you see markets? And we can talk about that as well. So Gavin's saying autumn, winter, I think will be very tough for the euro and the DAX. Yeah, I think that's going to be crunch time, and I think we'll get an idea of how bad it might get before the winter, because they're struggling to fill up their gas supplies. So if they haven't filled up those gas supplies, storage tanks and the like, well before we get to autumn, so we're talking over the next couple of months, and if Nord Stream isn't performing or pumping as it should be, that's when the crunch point's going to be, because they're not going to be able to chase it into winter. So we're going to need to see what happens before we get to winter. So as I say, maybe the next couple of months are going to be key for that. But as I say, it purely comes down to, adding up your reasons for buying or not buying or selling a currency. And if you've got more reasons to go one side than the other, that gives you your bias. And that's how you trade it. And the wind is definitely against buying the euro here, even with the way it pops up. So until that changes, it's a similar thing to my view that dollar yen is a rally sell. Euro is probably a rally sell still at the moment. But as I say, there are levels that you can set out to look to buy it, and see if you can make your money that way. See, Harewood, you were asking about Gotobi earlier. Kay, do you want to just give another quick explanation of what it is?
Yeah, okay. The Gotobi days are, so Go is 5 in Japanese, To is end, and then B, it's added to make it's like multiples of 5 if you translate it in English. And as I was saying earlier, how do you call it? Englishization of the word. You can read it as "got to buy." I put it on the chat. it is the day, it are the days, especially on the 5th, 15th, and the last day of the month, where the Japanese corporates and especially the importers have to pay their energy bills to the suppliers. Well, that's how the contracts are made, and so therefore, since all energy around the world is still expressed in dollars. Therefore, they have to buy dollars those days. Now, they don't have to buy all the fifths. If they decide to hedge everything on the 5th, they don't have to do anything on the 15th or the 30th. That's why some of the Gotobi days are actually not doing anything. But it won't explain a move lower in dollar yen, because the actual transaction for the Japanese importers is to buy dollars. Exporters have a completely different way of hedging or selling dollars or currencies to buy yen. They do it in a completely different style. They do it throughout the day, or they might even use options, or because the big car makers, let's call the biggest exporters, they do have options in place as well, by the way. But yeah, so the Gotobi is never going to explain a 200-point drop in the dollar yen.
Yeah, cool. Thank you very much. So yeah, it basically means multiples of 5 when these guys can do their transactions, particularly for energy. Catherine was looking at join Blake in an Aussie Kiwi long yesterday. It's fallen a bit since then, like our view. Not one I look at often. You know, you can take it pretty similar to Euro Sterling in the basis that it's obviously a cross between Australia and New Zealand. I haven't seen Blake's analysis for his long, so I can't really comment on that. It did look like we potentially having a breakout of these recent highs, up at these 111.60s. That hasn't proven to held. Just looking at this chart here, and if I put a couple of lines on, looking, if I can line it up properly, somewhere around there is looking like it's a bit of a support area. If you're breaking below there, then potentially there's signs of trouble. Again, this is one that's going to move. When you've got Kiwi dollar, Aussie dollar moving the same way, it's going to be a sheer weight of numbers thing, much like the euro's bigger than the pound. You're going to get that volatility difference in this one as well. But just for taking a purely simple view on this chart here, we're right on support at this 1090.11 area. Keep an eye on that if you're long. A break under there, and we're potentially looking at trouble if you're long into that one. So I don't know what your levels are for that, Catherine, where your stops are or anything like that, but there's a levels you've got to do, and I'd expect us to find resistance again up into this 60s area before we head to those highs, and that high will be a bit of a line in the sand. If we can get above the 60s, then you should be hopefully sailing pretty. So good luck with that one. Are you the Catherine who's in our room as well? If you are, then obviously we can have a further chat, and you can question Blake on his reasonings behind that one as well. Right, so if there's nothing else from you boys and girls, we'll call that a day. As mentioned, just for any latecomers, both myself and Kay are off next week. Kay should be back the second week, hopefully on the Tuesday. I may be in parts that second week, but I am still on my holidays then. So you will have Steve, Stelius, and some of the other crew from Forex Analytics joining you. Be good to them. Don't break anything, and don't let them break anything. I know they're not here; they can't hear me. Don't let them break anything while we're gone, because I know what Steve's like. We'll have pictures of women up and all sorts going on by the time we get back. But anyway, see out the rest of the day. Still plenty to do today. Keep an eye on those moves. Stay safe. Have a great weekend. If don't see some of you before then, and we shall see you in a week or so's time. Thank you very much. Cheers, Kay.
Hey, thank you. Have a good holiday, Ryan, and see you guys
Cheers,
in a
mate.
week and a half. Bye-bye.
Thanks, mate.